Hello and welcome to this, the first in a series of 4 videos looking at the operational case study for this time around, which is tread cushy. What we're going to do in this video is the commercial overview. So the purpose of this video is to have a read through together and to discuss the case from a business angle, a commercial acumen angle, to have a look at the business issues that are being implied by the material being presented with here, and to try and decide what issues the business is facing going forwards, and also what issues the examiner may choose to focus on. Okay, now the approach that we're going to take is to have a read through together and think about the business issues as they crop up through the material, and then we'll summarise those points together at the end. Okay, so we can see on the first page that our role is as a finance officer working within the finance department. We are principally involved in the preparation of management accounting information, but we also do a little bit in relation to financial statements. So the main focus here is on management accounting information, and that's not a surprise, being as usually at this level P1 as a paper leads the way. So we can think principally in terms of P1 leading the way for issues that are going to come up that will lead to variance in the exam. Okay, so Tread Cushy is a company that designs, manufactures and sells a range of athletic shoes made using natural and recycled materials. So it already sounds like we've got a manufacturing business for a start, and that automatically gets me thinking about things like standard costing, activity-based costing, process costing, all those kinds of things. And using natural and recycled materials already sounds like there's a bit of a corporate social responsibility or sustainability edge to this company, which, as we'll see later on, is definitely the case. So the company is based in Keyland. That's our home country as far as we're concerned, and that's located in mainland Europe and has got the K dollar as its currency. Now, Tread Cushy was founded in 2007, so not so very long ago, really. What's that, 14 years ago, I suppose, by 2 people, Sophia and Harry. Prior to this, both had worked for a major athletic shoe and clothing brand, so they've both got a background in this type of an industry, and as we'll see later on, there are 4 main players globally, so we can assume that they came from one of those 4 main players. And they are passionate about the environment, sustainability and the use of natural materials. So while they were working for one of the presumably big 4, they found themselves frustrated with a lack of focus on environmental concerns and the lack of natural and recycled materials being used. So it sounds like we've got an ethical footing for our business here, and you quite often find in the case study when we have this sort of ethical sustainability angle, particularly if it's something that they majorly trade on, if it's a big part of their marketing and so on, then we have to make absolutely sure that we maintain those ethical credentials. It's not unusual in the exam for there to be a threat to reputation, perhaps by suppliers we find out behaving less than ethically or something like that, and sometimes it's about how we manage that when it happens. So, as a result of that frustration, they've developed their own brand of athletic shoes and founded Tread Cushy in 2007. Based in a small workshop. So they work closely with raw material suppliers, and by 2010, so 3 years in, they developed their first range of casual athletic shoes made entirely from natural materials. So there's wool, natural rubber, sugarcane, castor beans. Sounds all very sustainable and environmentally friendly. Launched in mid-10 through the website, all the sales were through their website. So what can we infer from that? They had tech at their very heart from the start. Certainly back then they will have been very dependent on that website working well. Maybe that means they can save some cost by having a website as opposed to having lots of shops all over the place. But they'll be very susceptible to things like cybersecurity risks. But anyway, more on all that a little bit later on. amounted to 25,000 pairs in the first year after launch. They made a decision from the off that they were going to keep their manufacturing in-house. Well, that's potentially expensive, but it does emphasise, as it says here in the Preseen, control. So we can make sure of our quality, we can make sure of our sustainability credentials, because we're all doing it in-house ourselves, and a focus on craftsmanship. So this in-house sustainability craftsmanship is leading me to believe that they have a basic competitive strategy of differentiation. So they purchased in early 2010 a site in central Keyland where they produce, distribute. They have head office, all established on that one site. In the early stages, the company was funded with venture capital finance, as well as by private investors who saw promise in this new and innovative brand. Venture capitalists get involved in businesses for the short to medium term. So you're looking at sort of 3 to 5 years involvement typically. When they see a business that they believe they can help grow significantly, they invest in that business to capitalise on that growth. Now, although it's interesting by way of a backstory, the fact that this was back in 2010, we don't know for sure yet, but we would imagine that the venture capitalist has probably long since moved on, because they would normally move on, as I say, within around about the five-year horizon. The passion and drive of both Sophia and Harry, as well as the support of early investors, ensured that Treadcushy went from strength to strength, not only gaining brand awareness in Keyland, but in many other European countries. So its name has grown beyond its own domestic borders. So we're also beyond Keyland. And as soon as I see that, I'm thinking, well, presumably that means then we're selling overseas, even though we may still only have this one manufacturing site, which makes me think about foreign exchange. So we may well have revenues in overseas currency, but costs domestically, we may be suffering from foreign exchange risk here. In 2015, so 5 years after they launched their first range, the company launched a range of athletic shoes with uppers made from fabric created from yarn derived from wood pulp, with such fabric giving natural weather-resistant properties. So again, it sounds quite a unique type of product, really. Sophia and Harry developed a range of performance athletic shoes for running, which were first launched to the market in 2017. In the same year, Treadcushy opened its first store in the capital city of Keyland, so they have now got some physical infrastructure, some real stores, having previously relied on direct selling through the website, as we said earlier on. But we'll have a look at the split of sales and distribution channels later on, but I bet the website is still a major source of sales. They expanded the production facility, and a new distribution centre was opened nearby. So, in the year to the 30th of June 2021, which I imagine is the latest year end, the company's revenue was 68 million dollars and profit before tax of 6 million. So, 10%-ish net profit margin. So they're making money. During that year, the company sold more than 700,000 pairs of athletic shoes in 10 European countries. So they are selling significantly overseas, foreign exchange. There's also sort of logistics type issues to have to deal with, and dealing with different cultures and different languages. All that complexity is built in as soon as we start trading overseas. And opened its 14th store. By 2025, Treadcushy aims to be selling over 1 million pairs of athletic shoes a year across more than 20 countries, and we're aiming to be carbon neutral. So we're still pushing the envelope as far as sustainability and so on is concerned. So that's definitely staying on the agenda. And I would imagine that, a big part of our success will have been that reputation we have for sustainability that we need to preserve at all costs. We've opened our 14th store. Be interested to see where they are, but they may well be in all those European countries. So we've got a reasonable infrastructure as far as physical shops are concerned, But as I say, I bet we've still got the majority of our sales going through the internet, but we shall see.